Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, January 28th. I'm with Shaun Burgess. Shaun is Portfolio Manager and Trader in our municipal bond strategies. He's going to share some great information with what he saw this week. Very interesting information. Let's open up with equities. Let's go back to Monday. We had a special alert like we occasionally do when markets are volatile, and we shared a chart that showed the degree of extreme selling a week ago. This was last Friday. The video was on Monday discussing last Friday's action, where we saw over 1,300 new lows in the NASDAQ composite. Only the fifth time the market had eclipsed 1,100 new daily lows over the last 25 years. Interestingly enough, in 2000, where the NASDAQ from peak to trough was down 75%, the most daily new lows in the composite in any one day was 744. Shows you the breadth of weakness we were seeing and the extreme selling. Now, when we get that type of information, and the market's always trying to share information with us, we have to look at what can happen positive, what can happen negative. And we did look at some of that Dorsey Wright data that in the 4 previous times we saw that kind of extreme selling, positive things followed. Not immediately. The 5 trading days afterwards were muddled, and I think I used that term. Saw some gains, some losses. The average was down 0.5 point. That kind of jibes with what we saw this week. For all the volatility, and I'll put up a chart of just the last 5 days trading, the Dow Industrial finished up for the week. S&P flat. NASDAQ less than a point. Let's call it 0.6 of a point. That's a week you can go to sleep and nothing happened, right? Far from it, Shaun. You came in a few minutes ago and you said, I can't believe the market finished up. Interestingly enough, having traded in downtrends and you could almost say waterfall type of atmospheres before, one of the things I like to see, and it's never a turning point, but one of the things I like to see is weak opens with strong closes. The opposite of what I discussed in Monday's video. In Monday's video, we said we keep seeing strong opens and weak closes. What does that mean? That means retail is opening the market, and when institutions get involved, they're selling. They're selling into that bid. Now we see that change today.
Nice to see, too.
Nice to see.
Nice to see.
Also, institutions willing to hold risk. When you buy a security, you're taking risk. Hold risk over the weekend. Haven't seen that in a while. Does that mean next week the market takes off? Absolutely not. We're talking about some of the positives. There are negatives. We take a look at the Russell 2000. That chart looks like death. We take a look at a number of sectors, especially sectors in the more aggressive area, and we own a little biotech. You start looking at fintech, financial tech. You start looking at, the aggressive IPOs that have been priced the last 24 months. They look like death.
They are not pretty.
Right. So I think we have to be selective here. We have to realize that there's some damage in the market, but perhaps the selling got to an extreme and exhausted itself. There are some other things we look at. The American Association of Individual Investors. That is a poll that's taken each week, and it asks where you think the market will be over the next 6 months. And it tries to say bullish, neutral, bearish. 54% bearish this week. 54, highest since 2013. That's a number we at least have to say, that's interesting. Mm-hmm. Do we want to always be on the same side? No. We want to try to trade against extremes. So, again, we'll see what happens next week. we did get multiple buy signals again this week from Leo, Dr. Chen, in the quant strategies.
Yes, we did.
When we back that into last week's signals, we've really clustered buy signals. Remember, the quant strategy tries to buy fear and sell greed, right? We want to sell into big rips higher and buy big drops, big waterfall drops, any kind of fear that we pick up in the options market. We'll see what happens. Don't get too high, don't get too low. And one of the rules traders should learn, many have, investors as well, is that when you have an opinion, be flexible in that opinion. I like to say strong opinions, strongly held, is a recipe to get carried out in a box.
It's one of the quotes I love and live by. It's great to, you gotta just take it to heart.
Yeah, and Shaun,
killed.
you trade bonds. I primarily trade equities. But we still see the same from time to time. This week, I think we saw some fear and some outflows because of that fear in the muni market.
Yeah, Munis got to take it this week, and where in the last couple of weeks they've been pretty stable as Treasuries saw their bout of volatility. This week it was all Munis, and the degree of outflows was pretty significant. We haven't seen that. We haven't seen that in a very long time. It was about $1.4 billion. That's a big number. Now the question is, does that continue? Does it do more damage? Does it push yields even higher? When you see events like this, these tend to be opportunities, and that's how we view them. We've had some good success playing on fund flows. So fund outflows especially, where you get that fear driving yields to rational levels, and it's a good time to possibly put some money to work. We may not be there yet. There may be more damage to come, but we're keeping a close eye on that and a real close eye on those fund outflows.
And like equities, when we see that, it doesn't mean that you commit all cash immediately, but you can start to be selective.
Start to nibble here, start to nibble there, take advantage where you see some, and you don't, like I said, you don't commit everything. You just take advantage where you can.
Right, and for our clients and viewers, one of the reasons we structure our fixed income portfolios in individual equities is we try to stay away from pooled investments in fixed income. What Shaun's describing when he discusses outflows, when mutual funds get sells, they must sell to create the capital to distribute to that shareholder. So oftentimes the manager, and I say the poor portfolio manager, he or she has to go to the most liquid bond they own to sell. It may not be the bond they want to sell, but we're able at times to pick off very attractive issues at depressed prices. Whether they're depressed just for a day, a week, we don't know, but we'll try to analyze that in an ongoing manner.
Yeah, keep a careful eye on that. If we feel it's a good time to go heavier and buy more and maybe push out durations, and we make that call, and and we'll do that at the time that see what the market's giving us. So
great. Well, thanks for joining me today,
problem.
Shaun.
It's a pleasure.
Have a great
always.
weekend. Everybody enjoy themselves. Don't forget to like, comment, and subscribe. I'll give you an example of the subscription. You were immediately notified of Monday's trading alert. And again, all we were trying to do is share information with what we're seeing. We expect there to be some more volatility. It was nice to see the volatility index, the VIX, come in a bit today, but we'll certainly be on our toes next week. Have a great weekend.